Hi guys, Alessio. In this video I want to address a very important question which many of you actually asked me, and I want to try to address it. You see guys, it is certainly true that Bitcoin has dropped quite significantly from the 2017 highs. As you can see from this chart, for example, it's been quite a massive destructive downtrend in the price of Bitcoin, and about an 85% drop since 2017 highs at 20,000. Now, as you probably know by now from the previous videos that I mentioned, that I don't believe that Bitcoin has yet bottomed. I think that what we're seeing is probably a corrective move in the price of Bitcoin, and I think a bottom will probably form sometime this year. I just don't think the bottom has yet been reached, but I think potentially we could see it. I don't see any evidence of an uptrend either at present, despite what may appear to be a higher low that may actually be nothing more than a correction for the moment on Bitcoin. But here's an interesting point. If we just leave that for a second. Question I want to address to you is this. Many of you actually said, and it's a very good point, which is, look, so what if Bitcoin has not bottomed? Bottom line is, some people say, the argument is, look, if Bitcoin has dropped by 85% or 90%, then now is the time to buy. Who cares if it hasn't bottomed yet? And yes, who cares if it goes a little bit lower, maybe to 3,000, 2,000, or 1,800, something like that. Who cares? The argument some people make, and I'm not making this argument, there's many people out there are making this argument, that maybe it doesn't matter if Bitcoin hasn't bottomed because it's dropped so significantly, about 85%, that now is the source of value. Now Bitcoin is so undervalued that it doesn't matter. We might as well just get in and start loading up and start nibbling and buying on this market. Now, do I disagree with that argument? No. I actually think that's a perfectly good argument. It's not wrong. It's not a wrong argument. For example, some years back in 2011, price of gold dropped. You may remember gold dropped from about $1,900, almost $2,000, and it crashed all the way in 2013, all the way down to almost $1,050. So gold dropped in a matter of a few years about 50%. Was it wrong to buy gold near 1,000 or 1,050? Just like that without waiting for a bottom? No, I don't think so, because some might argue that it was a source of value. It was extremely undervalued. So I would say this, there are two types of investors. There are investors and traders like me. You might be like me in the sense that you wait for the charts to confirm, you wait for some kind of precision analytical signal to then get in, like for example an uptrend or a bottoming pattern. Okay, there are many traders, I'm sure you like me, you like to wait for some kind of bottoming pattern, some kind of evidence or some kind of actual factual clue to confirm that the bottom has been reached and uptrend has started. That's fine. I'm very much like that. And there are some other kind of investors, some other kind of people out there who are, I would call them value investors, value traders. Those folks, they don't really care about trends or whatever, or momentum, or they may not even care about chart analysis. They might just say, look, something has dropped so significantly by 50 to 80, 90%, that the price has become so undervalued, so depressed, that now value has been reached, undervalue, or if you want to call it that. And they would argue that maybe now is a good time, simply because even though it hasn't bottomed, or even if there is no significant confirmation of a bottom, that is still a good time to buy because the price is so undervalued and depressed. I would say there's nothing wrong with that, because those value investors are looking for value, as the name suggests. But I would say this, if you're going to do that, then at least make sure you're protected. At least make sure you're using a stop loss. At least make sure your risk control. Your risk must be limited and controlled. Just go to the next chart for a second, guys. If you just go, yeah. Let me explain to you. For example, if somebody were to buy Bitcoin right now, let's say a value investor, let's say they bought Bitcoin near 4,000. If you're buying at 4,000, then that trader, what they should do is have a stop loss, some kind of mental stop loss or an alert, price alert, that if the price were to drop back down below the lows, below the previous lows, then at least they can get out and quickly minimize their risk. And guys, my point simply is this. Just leave that chart for a moment. If you're a value investor or a trend trader, you have to have risk control. Either a stop loss or a mental stop loss so you can get out and minimize your risk, or a hedge. For example, as a hedge, one could, at the same time as buying Bitcoin, one could also open a short position to hedge oneself against that risk. So always have a hedge in place and always have some kind of risk control in place as well. Very important. Guys, if this video has helped, please give it a thumbs up, and also please subscribe for future videos. Thanks a lot.